so much for coming out on this blustery morning in Northeast Ohio. We were bound and determined to get this stuff, but we slid right through December with no snow.
Woohoo.
So thanks for coming out on Wednesday. Our weekly FEBE meetings that are sponsored by Dunkin' Donuts, our friends across the street, and they also have one on 58 and at Camp's Corner. So thanks for coming. I'm going to turn things over to Misty Aschenbach.
Correct.
That's going to talk about taxes. So fun subject.
Riveting.
Yeah.
Actually not going to talk about taxes. We're going to talk about tax time. Okay, so small business owners have to organize their information and submit it to someone, hopefully not themselves preparing their returns. We're going to talk about ways that you can organize your data and make sure that you're not costing yourself too much in preparation fees, as well as leaving any saved tax dollars on the table. So I didn't intend for this meeting to be a, hey, can I deduct this? Hey, can I write that off kind of conversation. But I'd be happy to give you my contact information if you have questions like that afterwards. We're going to go over some basics about getting your information organized. First of all, I guess I'm Misty Aschenbach. I'm a CPA for Robert H. Gray, CPA Inc. over in Westlake. For those of you who were not here the last time I presented, a little bit about me. I am a normal person, okay? I have a great sense of humor, I think. I've never lived more than 5 miles from a beach. I used to surf. I like to write poetry. And I spend a lot of time playing board games with my children. So I'm a real life person as well, and a future small business owner. Right? All right, so in a perfect world, this is what's happening, your perfect vision. In a perfect world, your small business has organized their data all year long. You were looking at the results of that data as you went along, whether it be with the help of an accountant or a CPA firm or just yourself, internal management meetings. When you saw deficiencies in your numerics that you've been reviewing, you were taking corrective action. And you were also planning for any tax effects. For making money, Uncle Sam wants some of it. So you need to be making some additional purchases. Maybe paying out bonuses to reward those people who helped you increase those earnings. Maybe you need to make personal estimated tax payments or really kind of looking at cash flow. Are you going to owe taxes in March or April and that is your very slow time for cash? You need to plan for that. However, right, I work with a lot of small businesses and I work hand in hand with our small business at the CPA firm, and this is not what happens. So let's talk about reality. Reality is, as a small business owner, you are working any 12 hours out of the day that you want, and you are burning the candle at both ends most likely. Very common that you're not doing those things in that perfect world that I just mentioned. That's reality, and you're not alone. There are many small business owners who are behind the perfect vision. You might have partially compiled data. My QuickBooks is mostly input. My Excel files, almost up to date. You're looking at results that aren't giving you the grand picture because you're missing information. That's the real world. Let's see here. So what are we going to do about it? Now what? What are you going to do? It's tax time. You live in the real world, not in the perfect world, and you don't have all of your information organized. Are you going to schedule an appointment to drop off your shoebox or boxes? Right? That's probably extremely costly. You're going to devote a week under an input rock so that you can catch up an entire year that you may have not done anything with yet? Just hide. It'll go away. Right? That's an option. File an extension. I'll get to it. Well, if you're making an appointment to drop off your shoebox or your boxes, I will tell you, we have clients who do that, okay? They pay a whole lot more in preparation fees, right? I've got to sift through a box of receipts. I get to classify them where I think they go. I'm not the owner. I don't know 100% what that was for. So am I going to miss out on deductions? Devoting a week under an input rack where you are doing that yourself. Okay, that is not fun. It is extremely painful. Not only for the person you're going to turn it over to, but to you. Because what's happening when the small business owner is hiding under a rock for a week or more to gather this? You're losing out on opportunities. You should be running your business, not inputting data, especially all at one time. So if we were living in the perfect world, that stuff was being done as we were going, not at the end of the year preparing for taxes. If you hide, it will go away. That's not true. Don't use that as an option. They will find you. They will be looking for you. They, as in my nemesis, the IRS. Oh, sorry, I'm on tape. File an extension and I'll get to it. That could be an option. But I will tell you, if you file an extension, filing an extension is an extension of time to file, not to pay. So in the event that you are going to owe taxes because of your business or just personally, you will be penalized if you do not remit a payment with that extension. It does buy you time to file, not time to pay. Any questions so far? Yes, Chris?
How do you necessarily know how much you have to pay if you haven't finalized your paperwork yet?
Well, hopefully part of your information is organized and you can work with an accountant or a CPA to guesstimate where your income level and deductions are going to be, what your taxable income is. You can remit a payment with your extension in good faith. There are safe harbor figures that can be used to assist you with that as well that can remove any penalty. All right, so now we've decided whatever our plan is going to be. Again, it's not hiding under the rock. Output equals input. Garbage in, garbage out. We've all heard that. So again, whether you are trying to do it throughout the year or you're waiting until the end of the year to put all of your financial data together to look at it in some output format, whether it be paper and pencil, Excel worksheets, QuickBooks, or other accounting software, what you put in is what you get out. So there needs to be some understanding, and that's where working with a bookkeeper, accountant, CPA to review your information ahead of time becomes really important. If you are misclassifying items, maybe you're putting your loan payments in as an expense. Actually, that doesn't work that way. But you might think you have much less profit than the reality is going to come in. Okay, so keep in mind you get out what you put in. There are some basics. Income, right? We need to know what the income was. Deposits or how much you've invoiced. Okay, easy enough. We need to talk about expenses. What did you pay out or accumulate that you owe somebody, right? Those are your expenses. Well, that satisfies what came in versus what went out. We're good, right? No, unfortunately not. So let's take a closer look. Because it's not just what came in and what went out, how can you start evaluating the information that you have as you're organizing it to make sure that it's accurate for, again, working with your bookkeeper, accountant, or CPA? Let's talk about a very basic step, which is doing a bank reconciliation. How many small business owners are in here? Okay, how many of you do regular bank reconciliations? Okay, I saw a difference in the hands up there, right? Bank reconciliation is very simple, in my mind, to complete. If you do that each month when the bank statement comes or you print it from your online account, you will find if you have missed any income or expenses. Those are some of the very basics there. Did you forget to record a deposit or a payment from a customer? That means your income's going up. Did you forget to record the EFTs, your debits going out of your bank account? That's a common error. Now you didn't record expenses that you're entitled to. Many people often forget to book their petty cash expenses. Okay, we've got the little petty cash box. It was used for valid business expenses. Did you record them? Did you keep track of it? Are the transactions on those bank statements actually yours? Okay, this is very important. When we're talking about bank accounts and credit card reconciliations, that is where you can identify, you say, the bank statement has this transaction. A, did I just forget to record it? B, did I make that transaction? I will tell you a brief story about a client, an actual client. I went in, I was doing 2 years bank reconciliations to assist them to get caught up with their information. I found 2 very large checks that cleared 2 years prior. We put it in so we could reconcile, and then we had to investigate further. The outcome of that is they were not written by the client. They were not able to recover the funds from the bank. Why? Because it wasn't submitted as a dispute transaction in a timely manner. So we have one transaction for, let's say, $2,500 and another one for about $3,500. I don't know about you, that is extremely significant in my pocket. Come to find out through further research, a check that was sent to a vendor for general materials and stuff, common vendor, had a sneaky thief within that establishment who essentially did something called wash the check and utilized the micro ticker lines to write themselves another check. Fortunately, the thief actually wrote it to themselves. Okay, now, someone who's stealing, there's a claim on it. The client has not received any payments back on the $2,500 or the $3,500 checks. So the point of that example is if my client had been reconciling his bank statement when it was arriving, one, he would have noticed this much sooner, could have filed a dispute with the bank timely, maybe been given provisional funds on that. And it's a lot easier when you're doing things timely like that. All right, so the next step, once we've gone through that, and now we know most of our transactions are recorded in some fashion, let's see if they're in the right buckets, right? I try and think of income and expenses and balance sheets. Those are the buckets where the transaction itself is going to fall. You want to take a look at your assets. For people who hold inventory, this is a very important question. Did you take a physical count of your inventory at some time and compare it to maybe your computerized or your paper records? Is inventory missing? Did someone walk off with it? Or are you maybe misrecording the purchase of this inventory? PP&E, property, plant, and equipment. Did you have any new purchases? This might be a new automobile. Maybe you purchased a brand new building or a new piece of equipment like the crane that's pictured on there. Did you record it? Is it in the right place? Did you try to expense it when you're really not allowed to do that? Accounts receivable, it's the same thing. Does your end result match your substantiating records? Okay. Are you recording payments received from your customers on a timely basis? Are they being booked to the right place? Do you have bad debt that you can't collect? Maybe if you've recorded this invoice for a client, you're going to pay taxes, right? That's income, but you're never actually going to get paid on it. Maybe it's time to write it off. If you've taken the appropriate measures, it's time to get that off the books, decrease your taxable income, because that is bad debt that you will never see. Also, prepayments or deposits. Sometimes we do lengthy jobs that progress over time. You may have required a deposit from a client or customer, which isn't necessarily income just yet, okay? So we want to see where those are classified. Are they in the right place? Taking a closer look at your liabilities. We all owe somebody something, right? First thing you can do is take a look at your accounts payable. If you have a summary of what you think that you have due in bills, are those balances accurate? Do they total, again, the substantiating records that you have for that? Did you forget to record a payment to a vendor? Do you have new loans? This is a common error in which maybe I purchased a new piece of equipment, but I did not pay cash for that. I took a loan out for that. So maybe on my books that are not organized yet, I'm only recording the payments on this loan. Okay, again, not appropriate. Then also comes into play talking about sometimes money coming in, money going out is related to a shareholder of a small business. Was it a loan from you? Was it a capital contribution? Did you take money out? Was there a distribution that took place? There's tax consequence to all of these events. So it's important to just kind of look at the summary and say, does this tie with the records I have? Are things in the right buckets? Taking a closer look at your income statement. Is everyone in here familiar with what an income statement is? Revenues, less expenses, should be your net income, right? And then we've got some adjustments for interest and amortization, depreciation, some of that fun stuff where your accountant or CPA kind of gets involved. We could talk all day long about the possible errors on this, but I won't. So here are some highlight items. If you were looking at a summary of your income statement, did you record your payroll? This is a common item that forgets to be recorded. Maybe it's because you have a separate payroll checking account, okay? Tax payments. Corporate entity may have corporate taxes they paid. You may be paying sales tax. You might be paying local estimates. Did you record those? Are they in the right place? Maybe they belong on an income statement. Maybe they belong on a balance sheet, which doesn't affect your income, okay? Again, proper placement. You use subcontractors or purchase services. All right, you want to go comb through that account. So are people in there that you need to be issuing 1099s for? Anyone that you may have paid over $600 to that is not incorporated? And of course, you had them fill out a W-9 so you know their entity type, right? Before we gave them their first check, we already did all this because we're super organized. So at the end of the year, we know who's eligible for a 1099 and who's not. And we simply scroll through our records and we find the people that were paid over $600 need to have 1099s issued by January 31st. Any unusual new items, note it for question on placement. What that means is you're going to have stuff that you don't know what bucket it goes into. QuickBooks, for example, has this default account, which I'm not sure if I like it. It reads, Ask My Accountant. It falls on the income statement, and what it is I have some clients where there are 90% of their transactions are in there. Okay, that's not very helpful, but that means they had a question on it. What do I do with this? I don't know what bucket it goes to. Okay, you want to note those things. You want to be asking your bookkeeper, your accountant, your CPA. All right, draw attention to the questions that you had by segregating it. Put it in some other bucket that you can review these transactions. Let's talk about some personal tax data. So with this young lady, I left a couple of sample income tax organizers. Okay, for those of you who do not prepare your own taxes and you work with someone else, whether it be an enrolled agent, a tax preparation service, a CPA firm, they may provide you with something called an organizer. It asks you to fill out information about yourself, about your dependents. There may be questions on there about new activities that took place throughout the year. It is important that you look at that and note items. So whether or not you complete one of these in its entirety, which is painful, at least utilizing it like a checklist. Those are there for a reason. Us professionals, your enrolled agent, your tax preparation service, your CPA firm, we take pride in the work that we complete. And sometimes we cannot predict that something in your life occurred if you do not tell us about it. So again, new changes, life events, items like that, you would want to note that on an organizer of some kind. Yes, sir? Purchasing a home is very important to know, of course. Especially if you purchase a home and you don't bring me the mortgage interest statement, right? If you didn't tell me that you changed your address, now I don't know, okay. You didn't tell me that you bought a home, and you did not give me a 1099 mortgage interest because the banks shoot it to you electronically, right? Nobody brings it up. Maybe after I file, you call and you say something like, can't I take the interest on my home? And I pull up your return and I go, what home? Okay, So we are not infallible either, but you got to share information with us. So those organizers become really important, as lengthy as they appear. Sharon is currently holding one. If you'd hold it up, this is a sample back from 2011. I grabbed it out of the drawer, of a generic one that could be sent to any client. This young lady is holding one that is severely invasive, okay? It is a book. It is an autobiography of yourself. And not every page in there would apply to every client. Only certain pages will apply to you. There might be information on a Schedule C, self-employed, a Schedule E, somebody who has rental property or has some K-1 information coming through. So you might not necessarily complete that book in its entirety. Complex tax situations, that comes in completed in full. They may not fill out every line. They might write the word yes, see attached, because they've used it as a checklist to organize their information and say, oh, K-1, yeah, I have one of those, check, it's in the packet to take to my enrolled agent, tax preparer, or CPA firm. How do you prepare for delivery with your personal tax data? We talked about the use of an organizer and its importance. I bring up the shoebox again. Everybody likes to use the shoebox analogy, which are now becoming, I oftentimes receive electronic shoeboxes now. Okay, so we're moving out of the times of the old receipts in a shoebox and let's see if they need this or if I need to tally this up. Some people are using apps now, Expensify, Docufy, mileage tracking. They become electronic shoeboxes in my mind. You might need to access that shoebox, but if you want to save costs working with a preparer and make sure that information is as accurate as you can make it, you should do some work before you turn in the shoebox. You may piecemeal or email. We have clients that we never see. Okay, they live out of state or they travel during tax time, lucky. They just simply email or use a secure website called a portal to drop information off. So again, it is an electronic form. Maybe you're dropping it off that way. Some people are still more comfortable with an in-person interview. That allows you to take the time before you go, organize as much as possible, take it in and review it with the person who is preparing your information. You can walk through it, and most of the time they should send you with a list of additional items that were not organized. I oftentimes, when I am working with very cost-conscious type clients, as you get to know them, I can say, you know what would be helpful? We can keep your fees down if you were able to take this shoebox, let's say, and organize these receipts into these 5 categories for me and total them up. Yes, sir?
You just mentioned the portal.
Yes.
Your website.
Yes.
Have you ever heard of any hacking issues?
Have I ever heard of hacking into a portal? Yeah, absolutely. Yeah, criminals are criminals. It is definitely more secure than simply attaching sensitive documents that have your social security number, your income, maybe your birth date, that kind of stuff, to an email.
Do you have any recommendations as far as maybe like, switching?
For portal usage?
Yeah,
You know, I would probably defer that to an IT type of person. There are a lot of highly recommended companies that support those portals, and their pricing is generally based on the amount of storage space and time that you want available. For instance, we utilize one that was high ranked in the accountancy journal, so that's where we found out about the top 5 that they were recommending. And ours default to a 30-day storage, and then it drops off, it's gone. If I upload your tax return for you, you can log in and retrieve it for 30 days. After that, it's gone. So in the event that that portal was hacked, hopefully it's already gone. But I would defer you maybe to an IT area, or ask someone within your specific industry about portal support that they have used, and look into their credentials. So I was speaking about clients working with us. Longevity doesn't mean that we know everything. I gave a really which you guys may have viewed as a rash example that a client came in, didn't tell us that to change his address, didn't tell us that they bought a home, didn't tell us that they had mortgage interest. But again, just because I've worked with my accountant for 20 years doesn't mean that they know psychically that an event occurred in your life this year. We have a great relationship with a majority of our clients, and a lot of times we get phone calls about this great life event. Hey, I bought my first house or sold my house. What's going to be the problem with that? We have other clients who we are very kind with, but they don't call us. They don't tell us as they go. So you see that big new sticker on there? If you have anything new, anything. Did you have a baby? Those are missed. Can you believe that? We have had people, we give them their completed tax return back, they go home to review it with their spouse, and they call and they say, where's the new baby? And we say, what new baby? Right? Maybe we never see the wife. We never knew she was pregnant. The person didn't announce to us that he was a new father or a father again. Didn't provide us a document. How are we supposed to know? You have to tell us. So just because we work together for a very long time does not mean that we are psychic. So common errors and omissions. So as you're organizing your information and you're getting ready for what you all probably view as this grueling, painful process of analyzing your financial statements and preparing tax returns, here's some common errors and omissions. New dependents, I just gave a great story on that one. That even applies if you maybe remarry. So maybe you married someone who came with a couple of dependents of her own. Okay, we need to know about that. We might have been doing your information for the past 5 years. We don't know this new person. Okay, you want to make sure that you provide documentation on that. Moving residences, I also gave that example. HSA contributions and distributions. Joe, you might be able to speak on this. The banks, not Talmer, because I already got mine, many banks do not send out their HSA contribution distribution summaries until very late in the year, when most people have already filed their taxes.
Not Talmer.
Not Talmer. No, I already got mine. I check.
That is true.
It is true. They will come on a important tax document enclosed envelope, and on there it will list, you may receive 2 depending on who holds your account. HSA is a high deductible, people who have a high deductible plan, they have a health savings option. Making contributions to this plan are tax deductible. This is important to know when someone is preparing your information. Did you make one of those? Distributions are just as important. If I have a client who may have had a gambling problem and drew out all of his HSA money and took it to the casino, he did not use that for qualified medical expenses, did he? That is taxable. Yeah, mental health maybe, you're right.
You're assuming that he wants.
You're right. Hey, even if you won, great. Now he probably didn't give me 2 things, which was the W-2G from the casino that I should also know about.
And his system.
That's correct. So HSA contribution distribution forms, if any of you have those accounts, those are very important. They often come very late in the year. Distributions are not generally taxable if you use them for medical expenses, but they need to be reported appropriately on your return. I've dealt with letters from the IRS where they say, hey, we've got this distribution on this taxpayer's account. You didn't put it on. Okay, great. So then they estimate your tax as if that entire distribution is taxable. And they send you a big scary letter from the IRS that says you owe them taxes and you owe them penalty and you owe them interest. And in reality, you may have just taken the draw to pay for your medical expenses and 0 tax effect, okay? K-1s from companies and investments, this is often missed as well. Anyone invest with Cedar Fair? Nobody in this room? Cedar Point, their holding companies are called Cedar Fair. They're my nemesis as well. Those K-1s do not come out oftentimes until very close to the filing deadline, if not after. So those are very important. A client might forget that they have these, So if I've worked with you for a few years, again, I am not psychic, but if I knew you had it last year, I can almost bet, even though you forgot, I can say, I don't have that K1 from Cedar Fair. You may say to me, I sold that garbage. So don't expect it and remove that from my organizing list, right? I don't need that anymore. Or the client may say, oh, thank you so much. I'm glad we didn't miss that. 1099s. So now we're talking about you. You're doing your personal tax preparation now. Are you missing 1099s? Whether you did some type of pro bono subcontract work, or maybe it's coming from a broker. You have a brokerage account. Maybe you've got some stocks in there. Maybe they sold some off to utilize some of the old losses. Did you get the form on it? They're required to be out February 15th. Oftentimes they are not. Okay. Oftentimes you will receive your 1099 from your broker. We'll use Wells Fargo as an example. And then about a month later you receive another one. It has this little tiny box at the top with an X in it. It says amended or corrected. Guess what that means? If you already filed your taxes, better send it to your preparer and see if there's a tax effect on this corrected piece of information you received. Hopefully you gave it to them the first time. Sometimes these mailings don't arrive timely. Sometimes they don't make it to you because you moved and you didn't tell somebody. More common now with the ACA, we are having 1095s that are issued from the health insurance carrier. This is extremely important. I can't tell you how many phone calls we had to make last year, as it was relatively new to everyone, requesting these documents. They do a couple of things. They verify that you had health insurance for whatever period's listed on this form, okay? If you didn't carry insurance all year, you might be subject to a penalty. It also helped us reconcile those clients who may have been eligible for a subsidy. You have to reconcile that. Did your income come in high? Maybe you got to pay some of that subsidy back. Did your income come in lower than you estimated? Maybe you get more of a refund through that premium tax credit. But we cannot compute any of that without this 1095 from the health insurance carrier. You all will see these coming more and more based on the size of the health insurance carrier. Their requirements are changing as the years go on. So you may find, even though the first year it was mainly people who received subsidy that were getting this form to assist in their reconciliation, you may be getting one, even if you've got the coverage through your employer. Okay, you might be getting a statement. There's no subsidy listed on it, but it verifies that you were covered all year and what your costs were. Okay, so this is kind of new. This isn't something you may have been watching for in the past. Last year was fantastic. They issued 1095s to, let's say it was 400,000 taxpayers. 200,000 of them were wrong. So after we filed taxes for several people, they got their corrected form, which resulted in maybe additional tax due, maybe additional refund, I don't know, increased preparer fees, because now I've got to file an amended return for you. Sorry, I didn't do it. Inaccurate estimated payment records. This is a big one. This is common. If you are in a situation where you make personal estimated tax payments quarterly, okay, take a copy of the check, save a copy of your voucher, make sure that you document those figures correctly for whomever is assisting you in your preparation. It is a common error. I may give a client 4 coupons for $2,000 each, and I say those are the estimates you need to make. And they do what they want. And they send one, maybe the other, maybe they're not even for the amounts that I told them to do. And unless they, if they provide me feedback that says, yes, I made all of my estimated payments as scheduled, then I report that. That reduces their liability, right? Then the IRS sends a letter It says your estimated payments don't match our records. Now you owe more tax and penalty because now you've actually underpaid. So that's just another common error or omission to watch out for. Keep your records organized and documented for whomever is assisting you. You can avoid IRS letters, omissions. Why is it important to be organized? I think I've pretty much expressed that. You can avoid errors. You can plan, create clear and actionable information throughout the year to make better business decisions, okay? If you don't know how you're doing, how do you know where you're going, right? If you can stay organized, mostly, and I'm not saying that perfect world, you can get better management feedback. Our profits aren't where they need to be. Our gross margins aren't where they're at. Are we pricing correctly? You cannot answer any of these questions if you don't have reasonable information throughout the year to work with. You also cannot handle any cash flow planning properly. Tax savings ideas. In my world, my tax season started in November. People start to think January, February, oh, you're in the thick of tax season. Yeah, that was November. That was working with our business clients who were organized and had reasonable figures for us to plan. Is your income higher this year? That's great. How do we get it down, right? Because it's the double-edged sword. You make more, they take more. Tax savings ideas that make sense. How can we help? Maybe you're on the edge of purchasing a piece of equipment. You don't have to have it, but you could use it. Is that going to save you some tax dollars? We can help you plan by making those decisions. You're also going to reduce your costs from a professional service. Talked about those people that show up with an unorganized shoebox. I had to spend a lot of time sorting through that, making heads or tails, phone calls back and forth, email back and forth. I need additional support. Quite frankly, you're racking up the bill with your professional provider, even your bookkeeper. If you give her a bunch of disorganized information, she cannot put it in a timely fashion. So more organized, more thorough, you're going to reduce your costs. You're also going to reduce lost deductions, right? We talked about sharing all of your information. If you're organized and you know things are missing, you can get that caught up so that you're not leaving tax dollars on the table by not taking deductions that were yours because you forgot to track the information. And ultimately, for me, you could sleep better knowing that you're organized and you've got a plan and you know what's going on and that you're not leaving stuff on the table and you're not crawling under a rock or you're not taking that option that we talked about, which was just to hide, taxes will go away. I have my contact information up here if anyone has any questions after this session. If you'd like to contact me, you can email me anytime. You can call as well. I'll answer anything I can. If the phone call begins like, just a quick question, I want to know if I can deduct blah, blah. The answer, I will give you your answer right now. It depends. Okay? And you might ask a friend if they deduct X, and they do. But due to the rest of your story, actually you are not eligible. So every quick question about deductibility of items revolves around knowing the big picture. So those types of questions should be asked with your trusted advisor who knows most of your big picture. Sorry. Thank you.